Robert, it's great to see you again. Dovish taper, that's kind of the shorthand so far. What do you make of it?
Yes, Kelly, I think the Federal Reserve is behind the curve. They are starting to reduce the taper a little bit. There shouldn't be any purchases of mortgage-backed securities in this booming housing market. And the U.S. government doesn't need any support really either. So the Fed is behind the curve. I'm glad they finally did what they do.
Robert, this is Frank Collin here. You know, you forecasted the Fed might reduce their bond purchases by half, going from $120 billion to $60 billion. But you also questioned, was that enough to slow down inflation? In your opinion, with the Fed still buying those mortgage-backed securities, is that enough to slow down inflation?
No, because the Fed is still stimulative overall. Interest rates are near zero in the short term, and the purchases are continuing. So the Federal Reserve still has its foot on the accelerator, and that's not needed in this booming economy.
Robert, what do you make of the fact, and this might be really nitty gritty, but, you know, we love to speculate. You know, they announced that they would taper now, and they are basically tapering now. They're not waiting until December to begin that. Would you read that as sort of slightly hawkish, that they're kind of in a hurry to start this and kind of get that clock started to wind things down and then, you know, in the long run move to rate hikes?
Well, they're so far from being a hawk. You know, it's a dove that's finally trying to lift its wings a little bit. But I would not call this Federal Reserve hawkish by any stretch of the imagination.
Sure. I guess I just mean in terms of, I'm sure they wouldn't call themselves that either, right? But does it speak for itself that they're starting on this right away?
You're so correct. They're finally starting, and it's long overdue.
Where then do you think, if you, Robert Heller, were in charge of the Fed right now, what would you do with the policy rate and with asset purchases?
I would reduce the asset purchases very quickly, within 2 months or something like that, have it down to zero. And the policy rate, I would start to lift right at the beginning of the year to get it back to a normal policy stance that is no longer further stimulating the economy.
You know, Robert, the Fed funds futures imply a 90% chance of the Fed raising rates by July 2022. Our Steve Leisman says that's not likely or as likely in July of 2022. He has a longer horizon for those rates being raised, at least that 90% probability. Is next summer a good time to raise rates?
Well, the Fed is very, very slow, very deliberate. And I don't want to use the word political, but Powell wants to be reappointed. And there are elections. We saw today, we saw elections. More elections are coming up next year, important elections towards the end of the year. So they don't want to rock the boat at all. But they're boxed in. And it would take a very strong character at the helm of the Fed, somebody like Paul Volcker, to really get monetary policy back on an even keel and an anti-inflationary stance that provides for true price stability as it's requested by Congress.
Well, I'm definitely seeing more and more talk about, you know, where is Paul Volcker these days, Robert? So clearly the grassroots are looking for maybe something a little bit more hawkish. We'll leave it there. Thanks for your time. We appreciate it. Robert Heller joining us today with some reaction to the Fed's decision.
Shepard Smith here. Thanks for watching CNBC on YouTube.